Hallo liebe Cap Insider, heute ist Philippe Sissener von Sissener Asset Management wieder bei uns und wir wollen nochmal über die nordischen High-Yield-Märkte sprechen. Philippe, nice that you're here again.
Nice to be here.
Investing in the Nordics, what do investors need to know about the Nordic high-yield market? So in terms of how large is it, what kind of sectors do you have?
Sure, we'll go back and we define the Nordics as Norway, Sweden, Denmark and Finland. And most of the market is in Norway and Sweden. And it has grown tremendously in the past couple of years. It's now at approximately 50 billion euros, a bit more than that. It had historically a high amount of oil and gas, which has now become a very small part of the market. And real estate in Sweden has become a bigger part. It's now almost 25% of the whole market.
Okay.
But you also have increasingly diversification possibilities through a number of different sectors actively using the high yield bond market as a third source of financing.
Okay. Given that interest rates are rising, is that a risk for the real estate sector also in Sweden?
Well, usually it goes along with inflation, which adds to their top line. But definitely that is a risk that we are monitoring. Of course, higher interest rates in this market will lead to higher coupons paid by the companies because the market has a lot of floating rate notes.
Yeah.
So this will lead to higher interest cost for the companies. And the ones that are most levered might run into problems, but that's a part of our job to do the analysis and see which ones will make it and which ones will not. But it will definitely cause opportunities and disruption when the interest rates start rising.
Okay. And what makes Norway and the Nordics attractive for international investors?
Well, I think you're offering a politically stable and economically strong atmosphere. You know, all the countries are AAA rated, except for Finland. They are missing one letter. They're AA plus, I think. It's, as I said, the framework for business is great. There's a high degree of innovation and new businesses coming into the market. It helps to have a local edge and a local knowledge, especially on the governance side of things. It's important. I know next time we meet, we're going to have a separate section on the ESG. What's important from an international perspective that we offer higher spreads. We offer a stable and good framework for investing. And of course, the governance is in place.
Okay, that makes sense. Looking at your fund, you have also a tranche which is in euro?
Absolutely. So we currency hedge everything back to the currency the investor would like.
Yeah.
And the setup is in Luxembourg, so it's easy for investors to only be taxed in the home country where they belong when they invest. You don't have to think about cross-border taxation and so forth, and neither about currency. We fix that for you, and the share class available to Cap Insight's clients is hedged to euros.
Okay. And you do the hedging on a 3 months?
Basically, yeah, we do roll forward 3 months on the asset class.
Okay. Is there anything besides this, which is special on the Nordic high-yield fund market compared to the high-yield market compared to Europe or the rest of other markets?
Well, there are quite a few differences that makes it a bit different. I think most of the volume on the issue side are smaller, so it keeps many investors away. It's a sort of a smaller niche market that we can keep to ourselves. There's a lack of rating. There are no or very few public rated companies from Fitch, Moody's and S&P, which also requires more local knowledge and really the handcraft analysis tool around the companies. It's also less volatile, as we mentioned last time we talked, mainly because of the lack of ETFs and indices that you can trade on the Nordic high yield market. Because the problem with a lot of ETFs these days is that they are more liquid than the underlying assets. So if you would have ETFs here, they would really destroy the volatility because it pushes prices up and down just to be able to buy it. So the lack of these external factors actually makes the market less volatile, which is a good thing.
And is it also true to say that if the companies do not have a rating from S&P and so forth, that they at the end pay a little bit, a notch more in terms of interest rate?
Absolutely. I think that's why the Nordic market tends to offer. It's now at 180 basis points more than the European indices, but it has historically been around there, around between 150 and 250.
Okay.
Spread premium, which is it's quite a lot in today's market.
Okay, great. Thank you for all this information.
Welcome.
So, lieber Cup Insider, dass man wieder wertvolle Informationen, der nordische Markt zahlt ein bisschen mehr Zinsen als übrige High-Yield-Märkte und ist weniger volatil. Bleiben Sie informiert.